Good afternoon and welcome back to the Euromoney CEE Forum for our second panel of the day. My name is Lucić Fitzgeorge-Parker and I'm the editor for Central and Eastern Europe at Euromoney magazine. In this session, we'll be focusing on the outlook for banking in the region, and to discuss this, I'm delighted to have with me a very distinguished panel of speakers. In a moment, I'll ask them to introduce themselves, but before that, a quick note on the format of this panel. We have 45 minutes for the discussion, and this will include a Q&A session towards the end. So if you have any questions for our speakers, please do send them in. You can submit them via the chat box, and we'll get through as many of them as we can before the end of the session. But for the moment, let's start with some introductions. Kristine, perhaps you could set the ball rolling.
My pleasure, and it's great to be here, Lucy. Thank you. My name is Kristine Braden, and I've got two roles. I run Citigroup's Europe cluster, and I also am the CEO for our broker-dealer entity, which has been established effectively with Brexit in mind to serve our clients across the European area.
Great. Stan?
Well, hello, everyone. Pleasure to be with you today. I am Stan Lecat. I'm in charge globally of the corporate finance franchise for financial institutions at Société Générale. I'm based in London.
Niccolò?
Hello, everybody. Hello, Lucy. I am Niccolò Ubertalli. I'm head co-CEO of Central Eastern Europe for the UniCredit Group.
Łukasz?
Hello, Lucy. Hello, everyone. Pleasure to be here in that virtual format. I'm member of the board of Raiffeisen Bank International, Markets Investment Banking and Institutional Client Business.
And last but not least, Dinko? Oh, you're on mute. Sorry, Dinko.
I would like to send warm regards to all of you organizers, our chairpersons, panelists, and of course all participants. I'm the CEO of PBZ, a bank, a part of Intesa Sanpaolo, one of the major European banks, and we act as a regional hub for Intesa Sanpaolo, covering Croatia, Slovenia, Bosnia and Herzegovina, and 20 years with Intesa Sanpaolo. Before that, I worked with Raiffeisen. Thank you.
Okay, that's great. Well, it's fantastic to have such a wide range of experience and coverage on the panel today. Now, it seems a very long time since some of us were sitting on a stage in Vienna last January and discussing the outlook for banking in 2020. Obviously, things didn't work out quite as expected, but at the risk of being overtaken by events again, I am going to ask you all to make a few predictions for 2021. Łukasz, perhaps we could start with you. How does the outlook for banking in CEE today compare to when we were discussing this 12 months ago? What do you expect to be the key themes in the region this year?
Well, thank you for that question. Indeed, I'm still in Vienna like last year, but instead to be on the conference, I'm in my home office. So it's a big change. I think year before, no one of us expected this to turn like that. And for us, for bankers in CEE, with the focus on CEE especially, that there are quite a big changes. I think one I don't need to go into is the overall COVID impact, but what it means to banking is we are dealing in much lower interest rate environment. Before we had a bit higher than in Eurozone interests in the countries we are operating. That's a huge change. Of course, the impact of COVID on the real economy coming from no traveling, coming from less export-import has impact on fees. And the third, people forced to stay at home pushed even further our efforts to digitalize the business. So I think this is these are the anchor points of 2021 to go faster and faster digital, serve our clients, and to somehow fight against the lost revenues in interest rates and fees.
Okay, so Niccolò, would you agree with those? Is there anything else that you would add on that?
No, I totally agree with Łukasz and what he said, but there are also some other changes we could expect. Meaning, COVID has taken us very close to our customers, closer than what was expected. Meaning, consider that during COVID, we had double the number of contacts to our customers. Why? Well, customers were lost. Where, oh my God, I have no customers coming in my shop. I'm talking about the real economy. I'm talking about SMEs. I'm talking about mid-corporates. They needed support. Governments were there, and we were the transmission mechanism. We supported the economy to make this happen and to go through this crisis. And I think we have created a great relation with our customers. That we have created the trust that in the years was a little bit, lost and a bit broken. But now we have, just to give you an idea, 80% of the customers that requested a moratoria through UniCredit were proactive moratoria. We went to them and said, look, you have this opportunity. Why don't you go and take it? And again, it's not about the big corporation. Those have all the means to do them themselves. It's about the SMEs. That's the first point. The second point on the retail people, I would say, is not about fuss. It's about real life, meaning it's not about, oh, can I sell the loan digitally? Who cares when you cannot access your cash if the branches are closed? Who cares if, look at the Croatian example. They had COVID and they had an earthquake. The real issue is where banks were able to give those customers, ensuring they have an ATM card and they can use it. This is where banks sometimes need to be on top of it. All the rest is nice, but that was the basic. And I think COVID helped us there, and now we have advanced much further onto that and on creating this bond and this relation.
Well, you mentioned Croatia. Oh, sorry, Kristine, please go ahead.
I was going to say, maybe I could just add a few thoughts from like a broad Europe perspective, if that's all right with you. My view is that there's actually two other things that I think are really interesting. The first one is obviously, I call this sort of the sovereign moment for Europe, because for the first time, we've actually had Europe consider how it works together to address the crisis. And with the recovery fund, as well as its partnership around COVID, we're in a very different place to where we were a year ago in that respect. So I think we moved forward in an incredible way as a European area, and that will have impacts over time, which will be meaningful for this area. I think the second thing is that we've also had Brexit, and that also changes how we interact and where we interact. And so, risk trading books coming into the EU, et cetera, is going to, have a material impact from where we were a year ago. We're, in many ways, while we do a lot of business locally, we also did a lot of business with London, and that will change.
Yeah. And maybe, Lucy, if you allow me, just to add to what I think the colleagues have mentioned, and maybe just complement, and starting just with two good news. The first one, of course, we're starting to see, we expect, of course, to see with the vaccine rollout and with the, hopefully, the US fiscal package that will be passed on, a steepening of the yield curve. And that's, of course, very good news in general for the overall European banking sector, but also for the CEE banks, where, as I think Łukasz mentioned, this kind of lower for longer rate story is now starting to feed through quite thoroughly. The second piece of good news is, of course, that the big fears that we had at the beginning of the pandemic have not materialized. We're now hoping indeed for a strong recovery this year. That said, I would temper a little bit everything that has been said. There's still a lot of uncertainties, and I'm sure we'll have the opportunity to deep dive into this. In particular, with respect to first, really this ability of banks in Eastern Europe really to adapt in the same way as what the Western European banks have been doing for 10 years to a lower rate environment. But most importantly, to see how the unwinding of the whole government support schemes and forbearances measures will influence indeed the asset quality and the timing between provisioning booking and the NPL materializations amongst banks. That is the big question of 2021. We expect that is going to be really at the forefront of all the discussions of the bank's management in Eastern Europe going forward. And of course, so far, there's been relatively little guidance on that for very, very good reasons, because it's quite difficult to see through the fog at that stage.
Okay, great. Dinko, for the view from Croatia.
Yes, unfortunately, in our case, as mentioned earlier, beside this unprecedented pandemic environment, we were also struck with two devastating earthquakes. So one was in the late March of 5.5 magnitude, and the other one was on 29th of December of 6.2 magnitude, approximately 50 kilometers from Zagreb, both resulting in loss of human lives and material devastation measured in billions of euros. So basically, of course, the near-term outlook remains gloomy as second wave of COVID delays recovery, and the extension of lockdowns across the EU dashed hopes for an early rebound in economic activity. Of course, I agree with what was mentioned earlier with all the points. I would maybe emphasize here as well the asset quality. So basically one of the key themes is going to be the asset quality revision, following the current deferral of the NPLs and the gradual withdrawal of supportive measures. I would like to say that in the region, so CEE, SEE, Central, Eastern and Southeastern Europe region, in the last years, the NPL ratios have almost halved. And so we've seen a great improvement in that period of time. And as well, the NPL volumes decreased by close to 1/3, basically. And as well, during the last year, also the NPL volumes and the ratio improved a little bit, even though we had a COVID year. So basically, the decrease was at close to 9% year on year, and the NPL ratio reached 3.6% overall. Of course, this data may, however, not be fully representative of how the situation will evolve due to the pandemic, and many unknowns remain, and we will have a greater clarity later during this year. Let me mention another point of and one of the key themes, and this is the liquidity crisis, which is affecting a large volume of borrowers, ranging from bigger corporates to smaller and medium-sized enterprises, and ultimately also consumers. So high volume of new unlikely to pay exposures and early defaults would require banks to apply focus and dedicated resources for adequate preemption and rapid intervention, I would say. We would need to act quickly to avoid a situation where liquidity is no longer available and loans can no longer be restructured. And all this will necessitate the adequate strategy, systems, operations, resources, and skills. But I would also like to say that overall the region is in the better shape and better prepared than it was in the last crisis, 2008, 2009. Because now we have well-functioning NPL transaction markets in many countries, as well as established servicing capabilities.
Okay, well, I think that the question about asset quality is obviously a fascinating one, and what happens when all the moratorium and the government support programs run out. Niccolò, lots of the banks, including UniCredit, as Dinko said, have done a lot of work on NPLs since the last crisis, over the last few years. Is there a danger that some of that could be undone as all this starts to play out over the next year or so?
Look, I agree with what was said, meaning we all expect it's going to get worse, okay? But that's what banks prepare for. Meaning you do not get into a thunderstorm and just say, oh, I forgot my umbrella. You get out of the house with the umbrella, okay? Otherwise, it's just going to be too little too late. So as UniCredit, but many other banks have prepared for that. We worked for 4 years to have a very strong balance sheet, clean up, as Dinko was saying, clean up the balance sheet in terms of LLPs. And we enter the crisis in a very strong position. So I am certain that, yes, it's going to be bad, but we're going to support it and we're going to make it. And the second point I make, let's not lose the focus on the big macro and forget what's happening. A good business is a good business. A hotel in Croatia that today has nobody inside, beaches are not gone away. The sun is going to rise in summer and it's going to be hot, and the highlands in front are still going to be wonderful. And you know what? People, whenever you believe in summer, we will be still in lockdown, fine. Then next summer, well, there will be a day that COVID be gone and the beaches will still be there. And believe me, there will be plenty of people wanting to go there. So what I believe is banks just need to get that period of time. A good business is a good business. COVID has not changed the fundamentals. What it did is speed up the dying of the bad businesses. The businesses that were already limping, just, okay, now they're in real trouble. But the other ones are good business. They seem in trouble, but they will recover.
Okay, well, Łukasz, that's a question for you. I mean, do you think that this is, are you confident that good businesses will be able to survive even if the COVID crisis does drag on, as it looks like it might for some months more?
I totally agree. I would add one more point, that it makes a difference, the region that we are operating. And CEE region is a region which is going for the last decades through the development, but it's a region which also experienced a lot in the past. And I want to say is used to difficult situation and used to dealing and winning with difficult situation. And I think this is part of the DNA of the population living in that part of the world, that when difficult situation comes, we are here to overcome it. So to add to this good business, I think we are in the region which is positioned to overcome it, and also what was said before about the Europe and the EU funds, which a part of it will also support the economies of these countries. We have also an additional very positive stimulus to help on that.
Kristine, do you have some thoughts on the NPL side and asset quality and more generally?
I do. I think it's an interesting crisis. If we think back to 2008, the banking sector globally was in a very different position than it is today. And I think what's quite different for the banks, and of course, as Niccolò said, we need to be prepared. But on the other hand, I think we are prepared. So if I look at the TCE and the equity that we have to absorb loss this time around, it's very, very different. And so, especially within CEE, banks are well capitalized, which is actually fortunate given the fact that there will be some rain coming. I think what's interesting about this moment as well is I don't think there's ever been a moment that I can remember in my 20+ year career where the purpose of banks has been more relevant. We really are standing by to support our clients and to support the economies in which we're operating. And it's a beautiful partnership with the governments, right? Where we can actually kind of say, look, how do we work together to get our economies, our people, their livelihoods, their health through this crisis together? Where I think in the last crisis, many banks were sort of, on having difficulties, including Citi in this case. In many cases, I think now we are in the beautiful position of course, we're going to have to take hard calls, but at the same time, we have an opportunity to see how do we sustain our economies through this. And I think what was also referenced, which is very relevant for this particular region, is this region continues to grow, and our expectation is it will continue to grow over time. So now is the time to make those investments and to, remember that things are going to come back and we're going to have a time of additional growth. Our view just for this region and this next year is 4.7% growth. Now, obviously, that's a transition from a year that was a bit more difficult last year. But that's still a reason where banks were, should be looking at how do we invest at this moment.
Okay, so Stan, a question for you. I mean, we're talking about the role of the public sector and the role of banks working with the public sector, and clearly there has been a lot of that this year. At the same time, the relationship there are still some tensions in that sort of relationship. That hasn't been completely smooth sailing. Do you think that is do you think this does mark a sort of a lasting change in the way in which banks and sort of public sector entities will interact in the region? Do you think that it is right that this is sort of a big change in the sort of the attitudes towards each other?
Sure. Well, first of all, I have to say I'm absolutely concur with what I said. I think the banks have played an absolute central role in helping SMEs, in helping customers, in helping corporate clients during this crisis. It's been absolutely striking to see the level of support that has been put in place, whether we look at the Resilience and Recovery Fund, whether we look at the individual state level programs that have been put in place, is absolutely unprecedented. So it's about, and on this particular aspect, I think, and to start with a positive note, the cooperation between public and private sector has been absolutely outstanding and extremely efficient. If I look at the 4 layers of support to the economy and to the customer base that we're seeing, so the moratorium payment, the support schemes, the new lending and liquidity lines that have been put in place, the cash reserves and other resources, and those are all different layers that essentially are cumulative in terms of protection of the customers and making sure also that the banks can provide the right support. It's been an extremely efficient, I would say, cooperation with the public authorities, both at the local level but also the European level. So this is really to start on a positive note. The consequence of that is that essentially the impact of the crisis when it comes to NPL formation should be relatively, and again, I want to put a heavy disclaimer on that, should be relatively focused on some segment where we know that this, I would say, partnership between the private and public sector have been the strongest in terms of supporting companies and retail customers. Those are in particular, of course, the SME segment, but also the consumer finance segment, where we know that here, there will be pain coming up, right? I mean, that's quite clear. Now, just a final point on what we said before coming back to maybe some of the kind of expectations that we have towards regulators going forward. It is clear that when we see this level of support withdrawing, you will have some losses. Nonetheless, as was said previously, the MDA buffers have never been stronger in Eastern Europe. We're talking about 300 to 500 basis points. This is absolutely massive. This is essentially way enough to sustain more than any impact of the great financial crisis that we've seen previously. So that's the first point. The second point is that really banks are essentially vulnerable to shocks. When it's about slow burning crisis, they are actually much easier to be managed by banks. And we see that, across the cycles and when, crises are coming through. Which means that in the case of SME and consumer finance, what we expect really is that banks should have a lot more headroom to manage their portfolios, the potential losses going forward, because they are quite low duration portfolios compared to the extent of the support over 2 years that will have been received at that time. Coming back to some of the expected topics that we see between, I think there was, and obviously this is not here to paraphrase what has been said in a very good article done in FT recently by a prominent CEO leader of a colleague of ours. But it is true that when it comes in particular to capital buffers, and that will be a key issues going forward, the issue of capital buffers replenishment on the back of the fact that even if the CET1 level are very high, but clearly actually those buffers have been used during the crisis and will be expected to be used going forward to support the lending. I think very clear guidelines will need to be given. And those are talks that are happening as we speak, of course, at the level of the FSB. We want to make sure that indeed those issues come at the forefront of the policymakers' preoccupations going forward, because if you want the banks to support the economy going forward, and just to make sure that the recovery is going to come fast and strong, you want to make sure that capital requirements are stabilized and that investors do understand this, and that regulators are very clear about the targets that are being given. We want to make sure that any kind of uncertainties with respect to Basel III regulatory framework, stemming out of the 2008 discussions and guidelines, are addressed. We want to make sure that we simplify and calibrate, the way for banks to calculate, for instance, loss absorbing capital and liquidity. So all of this, I think, needs to be part of the wider discussions that needs to be had with the regulators. We expect they are already happening as we speak, and they will be absolutely instrumental to any recovery going forward.
Okay, well, I see we have got one question coming in before we go back to the sort of more general discussion that is about one of the comments we've had so far. I'm not entirely sure what this is about, but I think this is in response partly to Niccolò's comment, saying, do you really believe that COVID has not changed the fundamentals? Lots of things have changed, including the fundamentals. Yes, the sun and the beach will be there, but can we delete the bad things and the bad habits that we've got used to during the COVID period? Now, apart from sort of the difficulties of working from home, I'm not quite sure what bad habits we've got used to during the COVID period, but I guess the fundamental question, if you have any thoughts on what bad habits we do need to get out of, maybe it's bank-supported lending, I don't know, but whether the fundamentals have really not changed. Any thoughts on that, Niccolò?
Look, it takes time to change things, okay? And we should not get all excited because we went through a year of COVID and we behaved for 30 years in a different way, okay? So when people jump into the thing that office will not exist anymore, we'll all work from home forever. You know what? I don't know. Let's wait and see, okay? After the Spanish flu, I read a beautiful article. It's the end of the big cities. And that was one of the major New York newspaper, end of the big cities. New York will not be anymore, London will not be anymore. They decomplicate their size. So what I'm saying is, let's wait and see. Let's wait and see. Let's not get overly excited about what will fundamentally change. A comment that I would just say and conclude here is, for sure, there's been an acceleration of certain things. Digitalization of all our processes to customers, that will accelerate. For sure, as Kristine was saying, the relation with the government and the support we got, and the fact that we are the transmission mechanism, we are part of the solution. The fact that banks are there to support, that is improving. Now, would it last? It depends on the behavior, and the behavior has to stay there, and we'll continue that. But again, I am very cautious in jumping to conclusion too fast. Let's see and let's wait and see how things will evolve.
Well, I suppose you mentioned the digitalisation, of course, and I guess that's one thing that people are hoping will stick from the pandemic era. Łukasz, I mean, what are your thoughts on that? Do you see so far that the digital habits that people have picked up during the first part of the COVID are sticking, and do you expect those to continue once we do eventually get back to normal?
Well, I certainly agree on that acceleration of digital transformation, and I think I also would say that the acceptance on the client side, also client who really preferred the branch service has rose. It's much higher, and I think this will stay. But at the same time, I think we will need to find a way to somehow come back to a human-to-human interaction when it comes to creativity, when it comes to brainstorming, when it comes to working with to develop further our products. I mean, we all most probably use the same tools which are helping us to brainstorm in the bigger group, still virtually, but it's not the same. And I think if I can be an optimist, trying to take the best from the world of COVID and the best of the world before, I would like us to keep this intensity in the digital interaction with the clients when it comes to transaction and solving their short-term problems, but at the same time come back somehow to when it comes to real relationship with real human interactions, when it comes to the things which require creativity, working together. And this human touch is important. I think we are human, we are not numbers.
I see a lot of enthusiastic nods in response to that. I think we're all quite keen to get back and have some face-to-face meetings and conferences again. Dinko, perhaps one for you. I mean, Croatia hasn't always been the furthest ahead on the digital banking. Do you think that has the COVID era made a big impact and some fundamental changes, or at least a sort of big acceleration in your market?
Absolutely, yes. So digital transformation in Croatia, as well as in the region, accelerated in a very short period during this crisis. And with the countries entering lockdown, the bank started offering a wide range of products online. Online communication improved, procedures between banks and clients and within the banks become quicker and simpler, with remote work becoming a common type of work. I would like to say that we can see also migration also in numbers. For example, of course, cash is compressing, and the total number of non-cash payments in euro area grew by 8% during the last year. And the number of card transactions rose by a little bit more than 12% during the last year. I can tell you that in Croatia, which is well developed in respect of, for example, non-cash transactions, that in 2019 credit cards accounted for more than 84% of total payments. Of course, the digitalization is a huge process, but let me use this opportunity to go back a little bit to one statement from Bill Gates that I think he should feel embarrassed of. And this is, if we go back in 1994, most of you would probably remember that he said that the banking is necessary, but banks are not. Basically, this was 27 years ago. So look around, banks are still here. We have the oldest bank, Monte Paschi di Siena, which is now more than 5 centuries old, and it's still here, maybe not in the best possible shape, but it's still here. So important thing is that the banks recognized timely the necessity to, first of all, to understand the customer needs, but then to heavily invest in new technologies. And what we were seeing during the last year is basically that I've seen a number of banks, or almost all banks, which were functioning completely without any interruptions in the total lockdown situation, which means banks were prepared for also these completely changed circumstances. But I would say that this push by the customer, by the environment, by this unfortunate worldwide pandemic is, of course, putting additional never seen speed to the further digitalization. However, I need to agree with what was said by earlier by my predecessor here. If I go 15 years back in time, I was the one who was arguing with technology-obsessed colleagues that were saying, you know, we had at that time bricks versus clicks. So they said, no, branches are over, it's finished. In a few years, we won't have banking branches anymore. Well, today we have banking branches. Yes, there is optimization taking place, but still for the more comprehensive customer advisory, customers are seeking for a human touch, for a professional and personal solicitation, and this is going to maintain for a long time ahead. So basically, migration of simple transactions, but also simpler processes completely online, this is what we are seeing, but still the human touch will be inevitable in the medium future. I'm completely certain of that.
Kristine.
Yeah, I'd love to just add one other dimension to this digital conversation. I think, you know, when we think about this region, we've got over 7,000 people sitting in shared service centers, solution centers. We've made a really big investment in the region, and I think operationally that has been tremendous from a digital perspective. Getting those people, online, working from home, it actually gives us a new way to think about talent and also our operational resilience for the future. And so I think, while we are also seeing tremendous digitization in the front office with our clients, it's also a transformation of our back offices. And that's very exciting, because I think now that a lot of procedures can be digitized, it will help us plan for the future and make sure that banks continue to be able to serve, frankly, from anywhere. So I think it's very, very interesting, and we will continue to invest in those capabilities, in part because we can actually have people sitting from the comfort of their home if we wanted to. It just gives us an extended workforce in a very digitized way. It'll be cost effective. I think it's a very exciting future for us to think about in respect of CEE.
Okay, well, continuing the digital theme, Dinko, you mentioned the quote, Bill Gates quote. He's obviously not been the only one over the past 30 years who predicted the demise of banks, and more recently it was considered that it was going to be the fintechs or the big tech companies that were going to displace banks. Niccolò, I mean, what some people were saying at the beginning of the sort of COVID crisis that actually this was probably the point at where this was going to play to the strengths of banks as opposed to fintechs. Do you think that is what has happened? Has this given banks a bit of an edge in the competition between them and the sort of fintechs and tech players?
Look, I've always believed that banks can copy a lot from fintechs, but for a fintech to replace a bank, it's a long way away. Long way away. I remember my first trip to the West Coast, and all fintechs were telling me, "You guys are out, we'll replace you." 3 years ago, I went back. We should partner, you know that? We should partner because you have trust, capital, and customers, and we don't have really any of those. Actually, we don't. And another small problem, we don't make any money. Our business models just have a small issue. They don't make money. All right. And that does not last forever. So I don't think the crisis has changed this thing. I think the partnering was already before the COVID, this partnering with fintechs, and it will happen more and more. But I have talked with a lot of interpreters in the fintech area, and they look at me and say, "I wish I had your capital. I wish I had the access to the markets you have. I wish I had your number of customers. I just wish. And I wish I had your..."
Oh, Niccolò, we've lost you, I think. Have you gone on mute?
No, sorry, just saying that. But I was switched, so I was. They had both. And
okay, great. Łukasz, well, from your perspective, I know that RBI has partnered a lot with fintechs. Do you think the pandemic has made any difference to the equation, tech versus traditional banks?
I think this our business is still interesting for fintechs, and I would tend to say it makes us good that they are behind us and that they are looking at our business. It's like an additional motivation, to remember to keep the customer in the center, to understand what customer is expecting, and that nowadays is also not the same value proposition going across different generations, that the way that the youngsters want to be served is totally different than the way that those with a bit more experience expect from us, and we need to provide service to any of those groups. So I would still think that some fintechs can be successful in the future, whether in the partnership with us or on a standalone basis. As said, let's wait and see, but definitely not wait and do nothing, but wait and improve ourselves for the clients.
Yes, Stan.
Maybe just and completely agree with what's been said by Kristine, Łukasz, Niccolò, and Dinko. What I would say is first, the digitalization train had already left the station before the crisis, right, for banks. So it's been something that we've all experienced for a long time, that we've been focusing on for a long time. We know the legacy issues that we have to deal with banks, and that they are not small, right? So that's clearly a challenge. But when I look, for instance, at some of the colleagues at KB, right, in Czech Republic, and when I see the complete change of the bank over the past 2 years, I have to say it's quite impressive. And I think that's a real chance for Eastern European banks. I think the legacy issues are probably less prominent that we see in Western European banks. Again, whether it's about the role of AI, whether it's about the role of data, in front office, in back office, whether it's about the transformation of the branches, whether it's about the partnership of fintechs KB has partnered up with half a dozen fintechs over the past 2 years. It's quite impressive in every single field, from crowdfunding, in real estate to essentially e-shopping, financing. I mean, it's all over the place. So it's really quite impressive what has been done. So I think it's a great chance as well for the banks. And the last point that I wanted to say, which I think echoes what Niccolò was saying previously, is that what the reality is, I think this crisis is probably marking the return of the banks. Because when you look at the encroachment of fintechs into the retail value chain, yes, there are certain dimensions where we know that they are preeminent, payments, they're starting to get there in credit cards, of course, in lending. But if you want to negotiate flexibility on your mortgage, isn't that just much easier to go to your relationship manager and discuss with him? If you want to have advice in terms of wealth management, isn't that easier to go and see your relationship manager and have a discussion, and et cetera, et cetera. And I think at the end of the day, don't forget as well that when the government needed to put in place all these schemes, these support schemes, they didn't go to the big techs or fintechs. They actually went to the banks. Right, so the discussion happened with the banks. So I think it's quite important to keep that in mind going forward. And probably another element in terms of policy making that will be important going forward is also working a little bit on the level playing field between big tech and banks. And we know that's a big topic, in particular in terms of access to customer data. So this is something that's going to come up at the EU level, we know, and it's something which is quite critical to make sure that indeed going forward for the banks, actually, we have indeed, I think, the right playing field to compete with fintechs, and so in terms of regulatory supervision as well, of course.
Okay, great. Well, we are running short of time. I do see we have one question that is about the bank consolidation, I guess, bank M&A in the region. I mean, one of the things that's been notable, as people have mentioned, is that there's been a very stable, well-capitalized set of banks in the region, which have going into this crisis. Does anyone think that's likely to change much over the next year or two? Niccolò, I mean, you're one of the big banks in the region.
Look, it depends bank to bank situation. When you can grow organically 400,000 or 500,000 new customers active per year and exactly the kind of customers you want, why would you do that? And at the end, there's a price for everything. So you bring me a bolt-on acquisition in the CEE region that can speed up what I want to do, yes, why not? So let's be pragmatic. But again, the starting point for us is very strong customer generation organically. So it takes a real good accelerating deal for that.
Łukasz, any thoughts of yours?
Yeah, I think that, like in this M&A world, and Stan knows the best, you have like sell and buy side. And I think this situation also can create some opportunities. So some banks which were trying to be successful on their own the owners might be more willing to exit one or the other markets, and also returns. Look back, we had double-digit returns across the markets before COVID, and for some the premium might not be enough. So I think there will be some opportunities, and definitely Raiffeisen will look at it closely.
Okay. Yeah. Sorry, Stan. Very quick word.
Just very quickly. Look, I mean, clearly we've all seen the guidelines of the ECB around a year ago, really, I mean, inviting banks really to to consolidate, putting forward a number of incentives to do so, in particular with respect to offsetting the NPL provisioning, the bad loans provisioning taken. So all this we've seen. The reality, we also know that fragmented markets in general provide less high average ROEs for banks. So all this, is all great theoretically. At the end of the day, what we've seen for the past year, including in Western Europe and especially in Western Europe, is indeed domestic consolidation. Cross-border is still very difficult. We know there's a lot of regulatory obstacles to do that. In CEE, there's no exception to that. Clearly, domestic consolidation will continue to happen. Cross-border remains to be seen. We're still waiting some of the colleagues' banks over Łukasz in Poland, to go and start buying a lot of Eastern European banks. We have been waiting for that for quite a long time. It hasn't happened yet, and there are very good reasons for that, right? So that's just the reality. So I think I don't see, at least on a cross-border basis, any major reshuffling right now. Again, I think there needs to be a number of regulatory obstacles removed before that happens.
Okay, fantastic. Well, I say we could carry on. I'm sure this has been a great discussion. I have to say, I think it's been just as good as it was live in Vienna last year. But although still hope we can be back live next year. But in the meantime, thank you very much to all of you for joining us, to all our speakers and to our audience.